So let's begin our usual end of the week analysis uh, for the Nifty, the Bank Nifty, and the rest of the sectoral indices. And because last month, Feb, was the fifth consecutive negative monthly close for the Nifty, and it was a pretty severe fall, we will spend little extra time today so that we can analyze the monthly charts also, right? As always, I have three time frames: monthly, weekly, and daily. On the right hand side, I have the Heiken Ashi and the Japanese candlestick charts. So first, I will begin the first part of today's analysis. I will spend first on the overall price and the monthly charts, right? If I change this Heiken Ashi to the bar chart, I could have changed it to candles also, but the bar will make the maximum sense. We have 5 consecutive negative monthly closes. I do not remember when was the last time this happened for the Nifty, if at all it has ever happened. One of our students, community members, mentioned that no sir, it has never happened. He has cross-checked. I was just going through the past, just visually checking, and it has not happened for the Nifty. And on the trading view, I have data from 1990. So from 1990, on the monthly basis, I can see a 4-month correction. This is October, November, December, and January 1991. And yes, I can see a bit of a series of negative moves here. Yes, this is the one that beats it, I believe. And there are few here also. So that's not the only one that we are going through. We have a series of monthly negative closes for the Nifty back in 1994. And this is 1996. Let's understand these were very early days for the index, for the Nifty, not for the market. Market's been there for a long time. For the Nifty, this was very early, and this was also relatively pretty early. The dynamics of the market, the situation of the economy, the exchange, National Stock Exchange, and its benchmark index Nifty has come a long way, is far more matured than what it used to be in those days. So I don't think, if I just use my sense, I don't think it will be right to compare the current 5-month correction with the 5-month correction in 96 or 7-8-month correction in 95 or 1991. I don't think so. It is justified. It's not the right thing to do. What is important is now. What is important is where we stand right now and what's going to happen. So if I consider price wise correction, the market topped out during September, and since then it's been predominantly on the downside. If we consider from the high to low, from the September high to the current low, we are a little above 16% correction. And for 5 bars, we've discussed this. Now, a 16% correction, 15-16% correction for the benchmark Nifty is not alarming. It's not huge. As I zoom out, I can see a decent sized correction during 22. If I quickly drop an info line from this high to that low, it was an 18.5% correction, and it took around 8 months, not 8 consecutive negative months, but for 8 months it stayed down almost close to 19%. 5 months at a stretch around 16%. This is the COVID correction. Again, this will not be the right thing to calculate. This would be pretty steep. And if we go back, we can see another multi-month correction, a meaningful multi-month correction after a significant rally. And if we zoom in here and also try and figure out how much do these corrections last, it was around 25% for 11 months, around a year. And in between, there are shallow 2 month, 3-4 months consolidation corrections, which will be, I'm not going to drop info line in all of these, which will be in the tune of what, 7 to 10, 12%. The moral of the story is whatever data I'm looking at, I can do this, I can go back and I can do this. But whatever 2013 to 2025 data that I'm looking at, I can say that the markets, after a pretty significant good looking correction, one way upside, a 15% to let's say a 20% correction is fine. In terms of price, it's fine. In terms of time, also it's been 5 months. It's not like what we saw in COVID or what we saw back in 2008, Jan 2008, that all of a sudden it cracked because of some external impetus, because there was something which hit us from outside. So by that logic, if I look at the price correction and it has taken 5 months, it's not fallen 15% in 1 month. That generally happens in some kind of a panic or some kind of a fear situation. So we can say that, come on, law of averages is catching up. It looks like a healthy, decent corrective move. Of course, portfolios will come down. Of course, those who have entered the market relatively new are not liking this because they have not experienced it. Just because you have not experienced it does not mean that it is not natural. It's a very natural phenomenon that is happening, and we just have to kind of sail through this. We just have to let it pass so that we see the other side. After it finishes, there is another side to it, so that we can see the other side, so that we can participate on the other side. But having said all of this thing, a big question always will be there back of our mind. How much more? How much more pain is still there? Both, let's say, in terms of price as well as in terms of time. Now, I'm not a big fan of time analysis. I did attempt it in my career earlier, but I found I was more consistent with price. Because listen, end of the day, you take a decision based on price more than you take a decision based on time. So, I have some Fibonacci retracements combinations drawn on my monthly chart, and these have been there for quite some time. And the first zone that I have a confluence is around 21,800 to 22. Then I have a loner fib, and then I start to get some decent combinations. This, by the way, I'll remove this info line. This blue zone that you see here that I've dropped is extremely important, because the market from a long-term point of view did give us a breakout here after multiple retests. After the breakout, it gave a throwback, and then it gave us a nice uptrend, and now it is correcting. Question mark. Will it come down to this level? And if yes, then what happens and what can we expect? Why I say that this blue zone, this horizontal range is extremely important for the long-term uptrend, because below this, the long-term uptrend becomes questionable. Of course, you will be interested to know, what's the level, by the way, and how much we would have correct if we have come down here. If we come down to this blue zone, we are looking at around a 25 to 30%, around 28% correction. We did see a 20% correction. So, can this be a two-legged 28% correction? I don't know. What I know is, if this comes and if the market breaks below that in whatever time, that's not good news for the overall bull market. Then words like recession, words like depression will start to come into the talks. Right now, I don't think anyone is talking about such things for the Indian markets. Macros are fine. They are not great, but they are not bad either. So from a price point of view, 21, 22, that's exactly where we are dealing with. And we just have to see that whether these levels hold or not. psychological 20K is extremely important. For the monthly charts, now that if I come out of my bar chart, go to Heiken, my usual Heiken chart, evaluate Heiken, candle, momentum indicator, RSI, range expansion, my monthly chart does not tell me that the market is about to bottom out. No, the markets are weak and the trend is your friend. In this case, it's on the downside and it may continue. So larger time frame of Nifty is not that great. We have some levels, wait and watch. Weekly, again, clean multi-legged correction that it's happening. I can blow out the weekly chart a little bit like this, and I can quickly drop a line from this point to this point, remove the right extension, and if let's say if this has to match the next level of fall, then this is around, what is it, around close to around 21,800. That's what we got from the Feb, right? Which is essentially these lows. We have to disregard this one. This is your 3rd of June election result day. A lot of choppiness, volatility happened. This level is not bad. It matches the size of the current fall, of the previous fall. So we need to see whether the market stabilizes here or not. Is there any sign of such thing from the momentum indicator? No. Anything the RSI is telling me? No. Anything the Heiken is telling me? No. Anything that the candlestick is telling me? Sadly, no. No's means I have to take a call on price. I cannot just say that the market is cheap, let's buy. I have to say that the market is showing me signs of bullishness, bottoming out, strength, then only can I buy. So, sadly, no. If I come down to the daily chart and do the similar kind of a thing, that is check if my daily chart is offering me any kind of a sign, signal of bottoming out. Sadly, today as I discuss the markets with you, it is strongly negative. So Nifty across all 3 time frames that we analyzed, from the monthly, weekly down to the daily, selling is very obvious. You don't need me to tell you that. It's a weak market. You don't need me to tell you that. But yes, if I could have seen anything on the charts that would have said, looks like it can slow down. Sorry, I don't see anything like that on the daily, weekly or the monthly charts. All that we could do is drop some levels on the monthly chart and get some levels and stay prepared. Just see how much further it drags down and from which level does it give us a bounce back. And if it gives us a bounce back, if let's say coming March is some kind of a consolidation, that is not enough. Will it lead to a second leg on the downside? So strongly, markets are weak and it's likely to stay weak. Do not get too hyper excited to get into a buying spree right now. Let's observe. Patience is a virtue. I'll spend some time with the Bank Nifty and the CNX IT in detail today, especially because these 2 sectors matter a lot in terms of weightages, mainly in terms of weightages. So for the Bank Nifty and the CNX IT, I will do a little bit of a monthly analysis with you. It will take a little bit of time, but we'll quickly see if we can find any meaningful levels or not. Now this is the Bank Nifty on the monthly time frame. This is your COVID crash, after which you've had a pretty decent uptrend. One should not complain about it. You had a pretty decent move on the upside. This is an area where we can see that the index had managed a decent amount of supports, and of course this is the COVID low. I'm just going to draw a couple of retracement from this low and this low. That's it. And I'm going to see if we see any kind of a fit or not. For example, any kind of a Fibonacci retracement confluence or not. That's the first one. And yeah, I can use this one also. This is the second one. It's not giving me any significant fit, but I like this particular 45 45,800, 45,900, just below 46,000, 45,800, 900. Mainly because of the fact that this level also confluences with the previous highs. Do you see this? This area. Of course, this is slightly higher and the Nifty is round about there. This we will get to see better when we go down to the weekly charts. This, what I'm doing right now in front of you, is primarily from the long term point of view. And yeah, so I'll get this another blue zone dropped here. This previous fractal high and lows are also very close. This high and this low also very close. So it's good to see that the Bank Nifty has a lot of fractal highs and lows confluence, which means that any of these levels can provide long-term support to the Bank Nifty. But taking a look at the candlesticks, taking a look at the Heiken, taking a look at the momentum indicator, RSI range indicators, same story like Nifty. It's pretty much weak on the monthly charts. We've got some levels drawn. This is a tad below the 46k mark. Let's see what the weekly charts are telling us. Weekly charts were predominantly negative for quite some time. And if you have been following my market analysis, end of the week market analysis, we've been suggesting that the Bank Nifty seems to have treated a sell on a rise kind of a setup. This fractal low has now become a fractal high, and this is not good news. This is not good news because then this leg is going to extend on the downside. That can cause some serious problem. That can cause some serious problem to the Bank Nifty. All that I would suggest is, you on your charts also, when you analyze your charts, try and find proper fractal highs and lows. Find out where the index had made earlier highs and do you have any lows close enough to that or not. You will not always get an exact fit, but many a times you may. Like I have just drawn this one. I doubt this will hold. The momentum indicators are not suggesting anything. Similarly, you can do this exercise for your other charts. Similarly, I see that, okay, this is also not a bad level. Multiple levels of highs and lows confluence at the same price. Please understand, these are not supports. Please understand this psychologically, it's very important. These are not supports. These are just historically proven important levels. These are levels, range, zone, which in the past had certain importance. That does not mean they will have importance in the present. However, as an analyst, as a trader, as an investor, it is important that you are aware of these levels. And if you see that from such a level, a chart is bouncing back, it gives you conviction. So don't expect them to be supports. If the market respects them, then it becomes a support. So there's a huge difference between when you draw them. So these are demand and support zones. They are not. Psychologically, they are not, because I have seen no matter how many supports you draw, if the market wants to fall, it will just crash through them. So the price has to respect that level. That's extremely important. So weekly charts are weak, daily charts are also weak. Now in the daily chart, I would take 2 extra minutes here. When I take a look at my trend momentum indicators, I do see that my trend indicators have come back to similar kind of levels, but my momentum indicators are holding relatively better. This can lead to choppier market situation. Time will only tell us. Indicators indicate, price confirms. I repeat, indicators can only indicate, it's price that will confirm. So unless and until price moves up, these kind of divergences means nothing, right? So Bank Nifty also on the verge of a support breakdown, on the verge of a range breakdown. And IT. These two indices I want to spend an extra time. Rest of the sectors I'll I'll go through them swiftly. So this is IT, and IT and pharma were relatively the better sectoral charts thanks to the dollar play. We have discussed this so many times. And something that stands out clearly are these two highs and the recent breakout that you had from CNX IT. So it is extremely important that both of us draw this. So this drawing is like an art. You don't have to be, there's no science in it. You don't have to exactly pinpoint the top. You can just figure out a zone which kinds of maps more or less most of the price points. So it's subjective. It cannot be wild. You cannot just plot it here and expect that this is a well drawn. Neither can you draw something like this. Okay? So there has to be a certain sense and a certain subjectivity. Together your idea, your objective is to draw a zone. So that it kind of encompass previous high. So I would, if I want to bring this also under my consideration, I'll drag it a little down. It will make it a little wider. So there is no right and wrong in it. It's just you figuring it out. So this was a crucial breakout. This is the throwback. The structure of the charts are still very much positive. It's okay. It's nothing to get really scared about. The important thing is, if this is a throwback and if this holds, then the IT can have a great upside. But will it happen? Let's see. The answer to this question we can get from the lower time frame, and I'm going to blow out the weekly chart, the CNX IT weekly chart. As you can see that we had already drawn some zones, and this must be our 52-week linear regression, which is sloping nicely up. It's at the lower border now. Momentum indicators, RSI, high trend candles are all negative. So will this zone hold? I don't have any such signs. So till that point, it's still negative. Daily chart is wildly negative. It's falling like a rock. It had given back to back, I think, couple of gap downs. We can see that from the candlestick charts. Stay away. Wait. It is at a zone. And it's important to see that at this zone, will it slow down? Is there any sign of slowdown? No. So Nifty, not a very good reading. Bank Nifty, not a very good reading. IT also not a very good reading. Relatively, IT is still relatively better because the long-term charts are better. It is at some zone, but it is lacking any signs of improvement. But overall negative. So we might have covered more than 60% weightage of the market, and we are yet to see any sign of selling slowdown. What about the rest of the sectors? Let me just go through them quickly for you. When you're looking at Bank Nifty finance, it is important you take a look at the private banks, and the private banks is behaving very similar to Bank Nifty. So nothing happening on the private banks side. What about PSU Bank? PSU Bank also is in a downtrend with down momentum. Monthly charts are also bad. Daily charts are broken down this level. Sad. Finance also will mirror what you saw in the Bank Nifty. It's, however, slightly higher than the previous low. This is extremely important for the CNX finance. Someone may say that, hey, wait a minute. Is it a left shoulder? Is it a double head? Is it a right shoulder? Is it something like this? I leave it to you. But not looking good. Not looking good. Trend momentum both on the downside. Auto, no, I would say energy. Energy comes, I think, the third most important sector after bank and IT. Multi-month correction, huge multi-week correction, falling with decent momentum and still no signs of selling slowdown. What I'm going to do is, if I open the sectoral charts one by one, most of the cases we will find strong downtrends at the lowest point of the month closing. It will be all broken down. So I will be looking for exceptions. There's no point in seeing the same thing in 10 different sectors. I want to see if there's any kind of an exception. Has any chart made some divergence? Is there any chart which has come to its previous breakout level? Something that stands out. Energy is approaching a very important long-term level. So it will be interesting to see if the weekly and the daily charts create any kind of a selling slowdown signs. Is it there? Not yet. But energy can be one. उसके बाद auto आते हैं. After that, let's come to auto. Auto had a great run, huge run. So it's just cooling off. Sadly, downtrend, down momentum, downtrend, down momentum. RSI is trying not to fall. It's an oscillator, huge sell-off last 2 days. Sorry, no. FMCG consumer durables. Remember, FMCG probably was the first sector to crack first. It was a sharp rally and then it gave away. From a monthly point of view, we can see a correction and a deep one. From the weekly point of view, this level that I had drawn long time back has now got broken. That's not good news. Most of the divergences it was creating here has got negated, and nothing on the daily chart either. Consumer durables, weak, pretty much clean and weak on the weekly, broke down the daily. Now, consumer durables, there is something that we can discuss for at least a couple of minutes, and that is from this low to this current lows. As our trend indicator slides down, our momentum indicator is not sliding down, which tells me that it's falling, but it's trying not to fall at the rate it was falling earlier. It's not falling straight vertical. Is it a sign of selling slowdown? We cannot confirm it. When will we can confirm it? We can only confirm it when it turns, when the trend indicator at least starts to turn. But consumer durables, we have a bit of a divergence. FMCG, no. Energy, no. Auto, no. Banking, we checked. IT, we checked. That leaves us with metal. Now, if you remember, metal was one sector which was in a trend momentum upside sync. Now it stays volatile, it stays choppy for multiple months or multiple weeks now. This is what metals is going through. Long-term charts, monthly, correcting, weekly, trying not to fall is the right word. Daily, completely choppy, need a proper directional breakout, either up or down. Down is as equally possible as on the upside. You cannot predict any kind of moves from here. So metals is choppy, it will stay choppy. Which leaves us with pharma and realty. Pharma monthly chart is far good looking, better than the IT if you ask me. It has already gone through a two-legged correction, and in these kind of two-legged correction, if I can take an extra 1 minute from you, what I can do is I can drop a projection of this move, something that I do very rarely. Okay. I just dropped a projection of the first leg on the downside. I was projecting it further on the downside, and the first level was around 20k. I like the 161 and the 261. I have not plotted the 200. 200 probably will come somewhere here. Can I check where will the 200 come? Yeah, as I was thinking, it comes exactly. This is not a bad level for pharma, by the way, this congestion. Anyways, that's lower from the current price. What is happening at the current juncture? Down, no sign of selling, exhaustion, down. Same story across most of the sectors. We got a tad bit of divergence on the consumer durables and energy coming close to a zone, and IT at a zone. So these are the three things that stand out. And finally, realty. Now, realty monthly charts have come off, a nice negative hike on the monthly chart, followed by a clean sell-off on the weekly time frame. And like the consumer durables, if you spend a bit of time on the realty daily chart, you will start to notice this kind of a phenomenon. Don't get too excited that they will lead to a reversal. They may, 50% chance, and they may not. They can slide further down, 50% chance. You have to wait for prices to confirm. So there are possible signs of some slowdown, maybe in the realty or consumer durables. IT is at an important level. Energy is approaching an important level. Bank Nifty is at the previous weekly lows we saw. So interesting, important juncture for the market. We're down almost 16% on a high to low basis, and it seems like there's still some weakness left. With all the analysis done, strategy, what should we do? Number one, if you're an intraday trader, you are a trader. You're not going to listen to anyone. You're going to trade on both the sides of the market. So continue doing that with discipline. Number two, you're a swing trader, short-term momentum trader, a holding periodicity of 1 to 5 days, 10 days, difficult for you. This will be difficult for you because moves will not sustain. Especially if you're a long-only trader, take a holiday, go out, take a break, join some course, join some program, not necessarily stock market course, you can join any other course, join some program, update yourself in something else, stay away. At times we need to look at things from a distance, it looks good from a distance, this is that time. Because any attempt of yours, unless you're extremely good and extremely disciplined, it's not going to yield you profits. Unless you're extremely good and extremely disciplined. Third case, if you're an investor. Now the investor will start to like the markets a little bit more because after a long time, you have found relatively cheaper price. But you're also scared that will it go further down? This is where you're stuck. So what I did in front of you, long-term charts, monthly, intermediate, weekly, please spend some time on them. Figure out some important fractal highs and lows and such zones, especially on the stocks which you fundamentally you like them, whose earnings have been stable, where you see a potential growth in the near future, and the price is relatively cheaper. For that you need to do your homework. So a staggered approach, a little bit of here and there, even if it goes down and you know that this is where I'm looking to accumulate, you should do your work. So the intraday traders will always trade. Investors should start to do your homework. The short-term momentum guys, I would suggest you were idle for quite some time. If you were idle, you would have saved money by not trading. If you had traded, if you've done it really well, congratulations, but it will be difficult. So stay away, exercise patience, and wait and watch for the markets to at least first give us sign of selling slowdown. We are, I don't think so, anywhere close to a bottom yet. So that's the usual end of the week market analysis. Now I will take a look at the chat box. If you have any doubts and questions, conceptual, feel free to ask me.